we are focusing on the packaging industry today, and among that, one of the market leaders, that's Uflex. If you could just pull up the valuations chart, we'll tell you why basically we're talking about Uflex. We'll definitely ask the management why the stock has been underperforming when it comes to the valuations vis-a-vis its peers like SL Propack as well as Time Technoplast. So there you go. You can see the price to earnings multiple. If you look at the median for this industry, which the Bloomberg terminal is showing, it's 17 times, and these are the multiples I'm talking for FY17. So Uflex is currently trading about 10 times. Look at its peers. SL Propack trades at almost 18 times. Time Technoplast trades at 31 times. Pardon me, SL is trading around 25 times. This is just about price to earnings, but let's also look at price to book. Uflex is under 1 right now. It's only 0.9. Compare that to peers. SL is 4.5 times and Time Technoplast is 3.7 times. Even if you look at price to sales, now this is pretty interesting. That is also below 1.5 times. And for SL Propack, it's 2. For Time, it's 1.7 times. So what are the key reasons? Why are the valuations? Is the stock actually undervalued when you compare it to its peers? Let's get in touch with the management of the company. We are joined by Mr. Rajesh Bhatia, who's the Chief Financial Officer at Uflex. Mr. Bhatia, good morning to you, and thanks a lot for joining us today on Bloomberg Quint.
Good morning to you as well.
Sir, I just want to start this conversation. I don't want any sort of commentary on the stock price of the company, but I was just looking at the valuations, and since you're the CFO of the company, I'm sure you'll be comparing the valuations of your company to the peers as well. What is the key reason that the stock price of, Uflex has been trading at a big discount if I compare it to your peers like SL Propack, and even, if you look at stocks like Time Technoplast? Just want to understand, what are the key overhangs? Is the higher debt burden that's overweighing on the company?
I think, no, it's not that, but, the stocks we are comparing with are purely the packaging company stocks. And, these companies are only packaging, while we have a business which is packaging as well as the packaging films. The valuation for the both businesses are different. And obviously, I think, the investors would be looking at value here because, a substantial portion of our business comes from packaging. I would say about 50% is packaging and 50% is packaging films. And that's why the valuations are a bit, I would say that, because it's a combination of the two, and, the investors are not clearly able to see as to the value from the films business as well as the value from the packaging business. That's why it's can't be compared with the peers like SL or Time Technoplast.
Enough, Mr. Bhatia. Let's not compare it to your peers, but what would you tell your shareholders? Because if they had to, hold on to this particular stock in their portfolio, where will the key performance now lie for the company? Let's say in the next 2 to 3 financial years, where is that the company is focusing on now?
I think in the next couple of years, our top line will be more from the packaging business. We recently commissioned our Sanand facility. We are in the midst of doing expansion of our holographic facility, which is today doing, almost 100% capacity utilization is there, and we somehow we even have to, not accept some of the orders. So the endeavor is to grow packaging more, and when that is seen in the numbers, ultimately the top line EBITDA and the bottom lines, I think then the business will start to get more valuation from the packaging business, and that's our whole endeavor. I think in the next few years, if this 50-50 ratio, we can make it 75-25, that's where, the valuation will definitely, the investors will definitely see a valuation play here. And hopefully we'll do well.
Okay, Mr. Bhatia, so you did speak about, your new facility, that's the Sanam facility. So if you could just give us an idea of what your capacity is currently, what can Sanam do with that? And where, if you could also tell us a little more about the timelines in terms of how you see the additional capacity and hence utilization levels as well over the next year or two.
I think today the plant is capable of doing 7.5 billion packs, and currently because while there is an infrastructure in place for that kind of numbers, But as of now, we're confining ourselves to about 3.75 billion packs a year, and we will require additional investment of about 50 crores to go up to that 7.5 billion packs. But next year, our target is to use about 50% of our capacity, and we have made huge inroads with some of the existing users of the aseptic packaging, and we have started supplies in the current quarter, and it will gain momentum from the first quarter of the next financial year. And for the year as a whole, we targeting about 50% capacity utilization.
As of September, if I can consider your long-term and your short-term debt together, it stands a little over 1,600 crores. And please correct me if I'm wrong. I just wanted to understand that are you comfortable with these debt levels? And since you are going into a little bit of expansion, what can it mean for debt, or will it be will your expansion be through internal accruals?
So I think the debt numbers are pretty comfortable for us at this stage. And given that the EBITDA is about 1,000 crores, a debt level of 1,600, it's a bit more than that. It's slightly about 1,800 or so, the debt number. That's pretty comfortable, and that takes also into account the spend we've already done on our Sanat facility, about little over 500 crore. So while the debt is all added there, the top line and the bottom line is yet to be added. We are not, I think the peak debt for the financial year 18 may be additional of about 150 crores over the FY17 numbers overall basis, which is sort of quite manageable in the context of the earnings that we have.
Mr. Bhatia, what sort of growth are you looking at, when it comes to new segments, and especially the aseptic liquid packaging? Now, that's the space you were looking to target, which so far has been dominated by Swedish major Tetra Pak. Has the capacity been set up there, and are you looking at any sort of additional revenues from this space in the coming quarters?
I think, as I said, that FY18. We've started already dispatching the current financial year in the current quarter, but the real momentum will come from the next financial year. And as I said, that we are expecting to sell anywhere say about 2 billion packs next financial year. And that is where we're looking at, the volume growth coming in. The volume growth will also come in our conventional packaging business, where I said that, the holography is the key business for us. And the H1 volumes for us were up 7%. And the values were up by about 6%. We are seeing this trend
that you're looking to garner from this new segment of the business, if you could compare it to your normal flexible business?
So the normal flexible business gives us about 15-16% kind of an EBITDA margin. And aseptic packaging is about 20%, 22%, depending on, the value add for the product is about 20-22% EBITDA margins.
Received orders for this?
We have started some, as I said, that, we are in the process of, so the aseptic packaging works in a bit different way. All the manufacturers test the shelf life of the product and all that, and that is where only they confirm their orders. And given that for the FY18, they had already done the tie-ups and all that. So FY18, our concentration was more on getting the products approved, showing them that, our products can also, withstand that life cycle of the product that they're looking at. And we did more than 24 companies we've engaged with. And as I said, that, some of the areas where, you don't need to establish that kind of a product shelf life, like liquor industry, we've already started supplies there. But, some of the other users like juices and the milks and all that will spill over to the next year.
Mr. Bhatia, if you could give us an idea about the contribution that comes from markets abroad, and your plans perhaps in terms of expansion, what traction are you getting from there?
Today, if we look at this, our overseas and Indian business mix is about 50 to 50%. The overseas business is all about the packaging films, and we don't have any packaging facility over there. The packaging facility is all built in India. And we have packaging facilities in Noida and in Jammu. And the new aseptic packaging facility is based out of Sanand. So today we're looking at about a 50-50 contribution coming from the domestic and the overseas business.
All right, Mr. Bhatia, thanks a lot for joining us and wishing you all the best for FY19 as well as FY20.